Welcome to Kitco News. I'm Niels Christensen. We're here today at PDAC 2020, the world's largest mining conference. Joining me today is Chantelle Schieven, Head of Research at Murenbeeld Co. Thank you for joining us today.
Thank you for having me. It's great to be here.
Excellent. What's your take on gold? Have we seen gold's best days after Friday's sell-off?
I don't think so. I think we still have some upward room. We definitely think we're in a bull market now. So we're more bullish than we've been in a long time. We did have some sell-off on Friday, recession concerns, some selling to cover positions, all of those kind of things. But I think once we start to see the policy response of the current crisis come in, that we'll see gold have another leg up. And I think we could even continue on this same crisis, a leg up in it.
Policy response. I think that's another good place to start. Markets pricing in more than a 90% chance of a 50 basis point cut.
Right.
Is this what gold needs? I mean, do they get it? And is this what gold needs to sort of recover from what we saw?
So, that probability came in really fast. When we looked at it on Friday, it was a lot lower. It just really spiked up. Fed reaction to policy response. Also to markets declining. The Fed, ever since 2008, has been very sensitive to market reactions. And so, when they do meet in the middle of March, if the markets are expecting a 50 basis point cut, I do believe that they will get it. And I also think we might see some additional bond buying, some more liquidity into the markets.
Yields go lower then?
I think yields go lower. I think we're going to see more negative debt, especially out of Europe. 10 years, they hit the all-time low on Friday. What about 1.15 for a 10-year? Tips yields is what we really follow. The real interest rates for gold is one of our main drivers right now. It's really what's driving the price. So I do think we see even a bit lower yields, the Fed reacting, the ECB reacting, just to kind of save off the fear.
So there's policy response. In your last letter, you're calling base case no recession, but expectations are notching up a little bit more.
That's right.
What does gold do in a recession?
So recessions are inherently negative for gold historically. So if we remember back to 2008, gold actually declined almost 30% before you really had the policy response, everything kick in, and then gold, of course, we hit the all-time high after that. So that's one of the reasons, So if it is a recession, if you don't have the policy response, then yeah, we could see gold decline in the interim. If the Fed doesn't react as much as markets think they're going to, we could see that price decline in the interim. But I do think that the policy response will come, both fiscal policy, monetary policy, to try and kind of stave off that panic.
Are you guys increasing your price forecast?
So we haven't increased our price forecast yet, and we were pretty bullish when we put out our last one, which was in the middle of January. So we kind of have an end price for this year of $16.58, somewhere in there. And then next year we think an average price of about $17.50. So we're already somewhat bullish on it. This current, during crises you do get the spike in the gold price, but then it does tend to kind of come back to a trend. So your average price will notch up a little bit, but you don't see it just continuing on. So although I do think we could see another notch up, I think we will, it will kind of come back to a trend, which is higher than it was, the trend from before.
Excellent comments on the gold price. Thank you very much for sharing them with us.
Great.
Thank you for being on the show.
Great, thanks for having me. It's great to be here.
Thank you very much for watching Kitco News. For more coverage from PDAC and all your latest news on the precious metals, go to www.kitco.com.